Good afternoon, everyone. My name is Shanita Jones. I am a certified public accountant. I am the founder of the Daycare Profit Strategy community on Facebook, and I am also the proud owner of Jones Taxes and Financial Services. We are a full service accounting firm, and we specialize in childcare, accounting, and tax. So before we get started, I'd like to thank our lovely hosts for having me here, Miss Darby and Miss Nikki. I truly appreciate you. I am a fan of both of your work. So I am here today to answer some of the questions that may be burning in your minds. So I am going to attempt to check your comments on my phone at the same time because I do know there is a little bit of a lag between the time when I speak and you can hear me. So if you see me looking down, that's just me making sure that I can hear you and see you. So before we get started, I'll open up with my disclaimers. Please be advised that I am not an attorney. Therefore, nothing I say should be construed as legal advice. We will at no time offer any legal advice or services because we aren't licensed to practice law. Secondly, I want to tell you that any tax information here today should not be interpreted as tax advice specific to your situation. If you have questions about your specific situation, you will want to consult with your tax professional. Or if you don't have one, we'd love to have you. And later on during our discussion, this is a discussion, so talk back to me now. Later on during our discussion, I will tell you how you can have an opportunity to work with us if you would like to do that. So does that sound good to everybody? Can you all see me and hear me okay? I can't see me or hear me okay on my phone. So someone is asking, will this session be recorded? Yes, it's recorded. Miss Darby and Miss Nikki will have the recording, and I will have the recording as well. So it should be recording in two places. So we should be all good. And if you want to share with your friends, if you have childcare provider friends that you think may benefit from this, or you think may benefit from some of the awesome work that Miss Darby and Miss Nikki are doing, please feel free to share, like, tag, and invite them. I think it's okay for me to invite people to y'all circle. So since I don't have any questions, which is strange, I will start out by answering some of the common questions that I've been getting this year. The number one thing I want to tell you, ladies and gentlemen, is that grants are generally taxable. What that means is, did you notice that the EIDL grant, we all made a big deal in the accounting and tax world when that became not taxable? The reason why we made a big deal about it is because that is a break from the norm. You can kind of think of this like when you're driving and you're used to turning on a red light, but you see that sign that says no turn on red or no turn on red after 6. Well, that sign is there because they're letting you know that there's something that's a break from the norm. Likewise, that is the same reason why we are making a big deal about EIDL not being taxable. So I see we have our first question. Ms. Darby says 1099 versus 1040. So that's not a complete question, but I can tell you how those two are related if you want to reformulate your question and give me a little bit more detail. So with 1099 form, this year the government rolled out a new 1099. 1099 NEC stands for non-employer compensation. A 1099 is given to self-employed individuals or individuals, in our case, it's mainly going to be self-employed individuals. You'll probably see 1099 NECs from many subsidy programs. Some people call them vouchers, scholarships, grants from your state agencies. You'll also see 1099K from merchant processors like PayPal, if you're using Brightwell, if you're using ProCare, if you're using Panda, Classroom Panda, if you're using their merchant processing systems, you should get a 1099K. Your 1040 form is where everything dumps out. Your 1040 form is your individual personal tax return. So if you have a 1099, most likely that 1099 is going to be filed on a Schedule C form, your profit or loss from business. And then those numbers are going to roll over into your 1040. And at the bottom line, that's where we find out if you're going to get a refund or if you're going to have a balance due. By the way, if you made estimated tax payments, make sure that information is shared with your tax accountant so that you receive proper credit. Ms. Darby says, what's the difference between a bookkeeper and a CPA? So I don't know if there's any bookkeepers in the group, but the main difference between, now some CPAs do bookkeeping. We have a bookkeeping package, but a CPA can do bookkeeping. A bookkeeper cannot call themselves a CPA. Some of the main differences between a bookkeeper and a CPA. First of all, in order to become a certified public accountant, you have to have a master's degree and you have to have 120 college credits at a minimum in the pre-described areas. We take 4 tests to be licensed. The tests are federal tests. Everyone that becomes a CPA has to take these 4 tests and pass them. You can liken this to the 1 bar exam that attorneys take or the state boards that your nurse or your physician would take. CPAs have to take 4. And we have to pass all 4 of those exams within an 18-month window. The books that we study to pass these exams are these thick. So a certified public accountant will study tax. We will know business law. We won't give legal advice, but we have to know business law. We take the classes with your lawyers. We also know business, and I have 3 business degrees, and then I have a dual in accounting as well. So CPAs are going to get, traditionally, will get more into the analyticals, helping you maximize profitability in your company, which is why our Facebook group is named Daycare Profit Strategy Community. CPAs will get involved in your tax planning situation. CPAs are also licensed and authorized to represent you before the IRS. So if you have a problem with the IRS, maybe you owe money, maybe some payments are late, whatever's going on, a bookkeeper cannot represent you. Only a certified public accountant, an attorney, or an IRS enrolled agent. Bookkeepers cannot. So we have another question. How does a home daycare file? So I can't see who your name is, and then they say what tax form. So if you are a home daycare and you are curious as to how you should file, I strongly suggest that you do not file yourself. Not saying that the other person, whomever asks it, because I can't see names. Oh, it's Miss Nikki. Not suggesting that you don't know, but if you're asking that question, that shows there's opportunity for education. So how you file your taxes is going to be based upon how your business is set up. Most home daycares by default start out as sole proprietors, and sole proprietors file on their Schedule C on their 1040. These sole proprietors may or may not receive state funding. They may or may not accept credit cards, but they will start out that way. If you are if you're a partnership, you would have a 1065. There are partnership issues in many states where you can't be. I know Texas is one of them where we have a lot of concern. If you are a corporation in a home daycare, I would question why. But if you are, you would file a Form 1120. And if you're an S corporation, you would file an 1120S. If you're a nonprofit, you would file a Form 990. As mortgage, electric, water bill, and any repairs that are done to the home to improve my daycare help me when I do my taxes. Absolutely. Miss Nikki, if you want me to bring you on, I can bring you on live on the screen as well. Just let me know and I'll figure it out. So if you are a home childcares have the greatest profit potential ever when you live in a home. And in most places you are required to. The reason for this is based on your time-space percentage ratio, you get to write off your electric, your water bill, and some of those repairs. But the percentage is based on your business use percentage. Mortgage is never, ever, ever, ever deductible. Your interest is deductible. When you make that mortgage payment, part of it's interest and part of it's principal. Interest is a deductible expense. Principal is not. So if your mortgage payment is $1,000, you cannot write $1,000 a month off. Sorry. And I am going to give you guys my nifty 50 lists of daycare deductions as well today. If y'all want it. Do y'all want it? If y'all don't want it, I won't give it to you. But if y'all want it, I'll share it with you. So these questions are moving. For example, are those considered expenses for my home daycare? Yes, they are. Maybe not 100%, but a large percentage of them are. For home daycare, if I want to continue my education to better my skills, yes, and get a bachelor's degree, can I use that towards my taxes as an expense? You can, but it's not part of the business. There are credits called the American Opportunity Credit. You can get that up to 4 years. It is $2,500 of it is refundable. And then there's also the Lifetime Opportunity Credit if you already have a bachelor's or if for some reason you don't qualify for the AOC. So if you're taking other trainings, anything that's going to put you in another position, for example, if you are not a director and you're a childcare owner, that the director's credential is technically putting you in a position where you can do something, a new career that you weren't doing before. So that may not be deductible. But if you were taking first aid training, if you were taking training on dealing with children with special needs or something like that, or even some of the trainings that you guys may take to learn how to be better leaders. But that education credit, you would probably get a lot more bang for your buck if you took the regular education credits, because there's a difference between a credit and a deduction. A credit matches your tax liability dollar for dollar. A deduction just reduces how much money you pay tax on. So if you're in a 20% tax rate and you spend $1,000 and you spend $100, you're going to get a $20 deduction. But if you were to get a $100 credit, that $100 credit would go against any tax you owe. Or if it was a refundable credit, that would be $100 added to your refund. So there is a difference between a deduction and a credit. Credits are usually more beneficial than deductions when you have a choice. We don't always have a choice. I also want to buy a van to help transport kids. Can I also use a car as an expense? Absolutely. So usually, if you're going to buy a vehicle for your business, you'll want to get it in your business's name if at all possible. If this vehicle is going to be used 100% for business, clear cut, easy. Now, the purchase of that vehicle, remember we talked about mortgage in the first question? That vehicle is an asset to your company, and assets depreciate over a period of time. A van is good for 5 years in IRS world. Now, if y'all anything like me, y'all gonna hold that, y'all gonna ride till the wheels fall off. But in IRS world, if you pay $5,000 for a van, you get to write off $1,000 each year for 5 years. You also could write off your toll, your parking, your gas, your oil changes, your brakes, your tires, your car washes, everything associated with that vehicle. That is called the actual expense method. Now, if the vehicle is not 100% or at least 50%, you may make out better doing the standard mileage rate. And that's where you'll get pennies on a dollar, like 58, I think it was 58 cents last year for every mile. Drive 100 miles, get $58 in deductions. For both of these methods, you will want to keep track of your mileage. I suggest the app called Mile IQ. I have no stock in the company, so if you find one better, go for it. But it works really well for a lot of our clients. When you're going to the mall to buy things for the children, when you're going to the market, when you're going to conferences, when you're going to go pick up supplies, if you're going to meet with other providers and discuss childcare business, those things, those miles are miles that you'll want to count and keep because you can deduct it. And if you're taking actual expenses, you still need to track your miles because you have to know how many miles you drove to do the percentage. Very similar to that time-space percentage ratio. It's just a lot simpler than that calculation. So yes, you can use a car as an expense. Also, under the actual mileage method of deducting your expenses, you could write off sometimes, in some cases, you could deduct the whole car in 1 year, but that's not usually the best thing for people to do. Again, you'll want to speak with your professional to make sure you are doing the right thing for your situation. It's not one size fits all. Some people standard mileage works better. Some people actual mileage works better. Okay, what is the difference between a 940 and a 944? Well, a 944 is not what most of us should be filing. We should be filing more than likely a 941. A 944 is for agricultural employees, but that 941 is a quarterly federal return. That's your payroll returns. When people talk about quarterlies, quarterlies are really these 941s or the 944s if you have agricultural employees. What that return does is it looks at the amount of wages that you paid, and it looks at and it multiplies it to make sure that the employee's Social Security and Medicare is calculated, and this portion of Social Security and Medicare that the employer pays is calculated. It gets together on that form and it tells you how much taxes. It also includes the taxes you withhold from your employee's paycheck. And this is our quarterly form that we have to file with the government. Your 940 form is your annual FUTA. That's what it's called, FUTA. It's for the federal unemployment tax. And that gets filed once a year. And most businesses, that is the lowest tax that you're ever going to pay. And those are all due if they aren't due right about now. Also related to these payroll tax forms, you will want to, if you're eligible for any of the credits related to COVID, employer retention credit, if you guys took advantage or participated in that program whereby they allow employers to delay payroll taxes, all of that's going to happen on your 941s. And your payroll provider would be processing it, or if you're doing it yourself, you may want to get a professional to help you out with that. This year is going to be more complicated than others. It changed a couple times this year. Someone is asking, when set up as an LLC, what's the best way to pay owners? Well, that's going to depend on your situation, how much income you're making, how many owners there are, how much other income you have. I did do a video. It's on our YouTube channel. I'll see if I can multitask and pull up the link. It's called How Do I Pay Myself? So this will give you an idea of some options that are available to you. But if you really want to know how you should pay yourself, you really want to make that decision, that situation in conjunction with your tax professional, just because there are so many variables that could come into play. So I'm going to still trying to multitask. I'm going to try to post the link to How Do I Pay Myself on the Facebook page for you, in case you guys haven't seen it. And you can also subscribe to our YouTube channel. Oh, okay, there we go. Tips on preparing and organizing for taxes throughout the year. That's a very good question. I actually have a list of 50 deductions that I see a lot of people miss. I call it my nifty 50 list of daycare deductions. Kind of corny, right? And the best thing that I can tell you to do to prepare for taxes is don't start at tax season. You want to start preparing for taxes the day you open your business. It's a year-round situation. I spoke with a lady yesterday, and she said she was going to start getting her stuff together next year in 2021, but she had a couple of years that were already way behind. So if we don't plan, if we fail to plan, we basically plan to miss out on things that will probably be beneficial to us. How do you stay organized? And I'm multitasking. I don't usually run my Q&As by myself. But today I was being a big girl. So I just dropped the nifty 50 list of daycare deductions for you all. So the best way to do on organizing, number one, you want to use your business bank account for all things business. You want to swipe that business card. My second tip, this isn't a Sharpie, but I know we have Sharpies. Get a Sharpie and write a big B for business on your business card so that you know which one is business, and you can write a P for personal, or if your name is N, you can write an N for Nikki so that you don't confuse those cards. When you go to a store and you're buying things for business and for personal, make 2 transactions. Yes, I want you to be that person in the line holding the line up. If you should happen to do things from your personal account, stop doing that. Do yourself, do your tax professional a favor. Transfer that money. If your banks don't talk to one another, if you're using separate banks, utilize Zelle. Utilize Zelle. Zelle yourself the money. It's instant, it's free, it's safe, it's through the bank. And then this way you'll be able to make that purchase from your business account. You don't do anything else. Keep it all in your business account. You also want to save your receipts. Your tax professional is not required to go through all of your receipts to do your taxes. But if the IRS ever audits you, they are going to ask for specific receipts. Think of me like number 4, number 5. Receipts fade. So if you have receipts, the moisture in the air, the moisture in your skin, they fade and they won't be legible for long. So I tell people, get a gallon-sized Ziploc bag, toss them bad boys in your Ziploc bag, and then put them on a regular 8.5 by 11 size, regular size sheet of paper, tape them on there, and run them through your scanner. And that's a thing that I used to have my kids do when they were smaller. They felt like they were part of the team. And then I would scan them in, save them to the cloud. So if the IRS ever asks you for any documentation, or maybe you're on a food program, or maybe you're on some type of Head Start or pre-K, and you have desk audits or financial audits, you definitely want to keep your receipts. So my biggest tips would be use a separate business bank account, keep all of your receipts, and use electronic software for your accounting. Now, home child cares often think they need to use something specific to home child care. You don't. You need real accounting system. You need real accounting system. You also need to have an electronic way for parents to pay you. So you want them to be able to pay you. The more ways they can pay you, the merrier. But do not use Cash App. Cash App is not your friend. Someone says, is it better to incorporate or do a sole proprietor? That again is going to be a situation that's a question that is going to be specific to each individual person, if you want to incorporate or not. From a legal standpoint, there are benefits to incorporating, but of course, I don't practice law. A sole proprietor by default, if I wake up tomorrow morning and I decide I'm going into the hair business and I'm going to do people's hair, aside from the fact that I need a license to be a cosmetologist, but so maybe that was a bad example. But if I'm going into the hair care selling business, the minute I wake up and decide I'm in business, I'm a sole proprietor. Now, the law tells us, we read, a sole proprietor, and I actually have a whole module on the different entity structures in my childcare group. But the sole proprietor is generally totally responsible for whatever happens in the company. And if you incorporate, you may incorporate as an LLC, or you may incorporate as a C corporation. A C corporation is a person, a legal person by itself, aside from the individual owner. So you'll want to look at the legal ramifications as well as the tax ramifications. Now, if we're talking incorporate as a C corporation, C corporations pay taxes. They're a legal person, so they accept, so they have to pay taxes. So basically we basically look at a person's taxable income, their profit from their business. We look at all of their other income sources, and then we make a suggestion based on that, how their tax position should be treated. So I can't say you should be an LLC, you should be an S Corp. There's no magic number. People ask me that a lot, because prior to Trump and the TCJA, we used to toss a number out there. I'm not going to say the number because I don't want to confuse anybody. We used to throw a number out there and tell people if their income was at or above this point, then they should do these different entity moves. But tax law changes so much, and it changed more than it ever changed in my life in 2018. And then that's when those black and white rules became very gray and purple and green. So someone said, I'm an LLC. What's the best way to tackle Biden's tax increases on small businesses? Well, let's see who asked that question. Let me look into your eyes. Well, the best way to take advantage is also always going to be to keep good records. You're going to want to have monthly financial reports. You're going to want to look at what's my gross. Well, you want to do that anyway, but you also want to look at what is my taxable income. And it's also a good idea to project things out so you'll have an idea of where you're going to end up at the end of the year. So up until this month, all of our clients that came included with their services, but then we're only going to offer it probably at our top tier. We'll give initial budgets to everybody in the middle tier, but our top tier will be the only ones that we do those projections out for. And the best way is to know your numbers and also meet with your tax professional. Maybe you need a tax plan. Maybe you just need a tax strategy to take a look at all of your situation, and then you'll be able to figure out some things that you can do. I don't know if you are, I don't know what your tax structure is. So tax structure is going to have a huge impact. We don't know yet what all of Biden's changes that he's proposing are actually going to go through. And we don't know if he's actually going to do everything that he said he was. But the outlook is that taxes will increase under the new administration. Let's see. I saw another question, but please share my thoughts. It moved. I think it was please share my thoughts on Cash App. I want to address them all of these things, but I don't want to turn my volume on and hear myself talk. I'm gonna try to refresh and see if it'll come up on my phone. Please share your thoughts on collecting payments from Cash App. Cash App is not your friend. Cash App is not for business. Several of our clients had their money stolen from them. One of the people that worked on our team, somebody infiltrated her Cash App account. Cash App they do have a business Cash App, I heard. I have not seen anyone use it. But the reason why a lot of people use Cash App is because number one, it's instant. And number two, they use it because there's no fees. But usually most things that are free are not always best for us. On Cash App, you do have the ability to put comments in the memo or what transactions are for, but you can get your account shut down if you're using the free personal account because it's not for business. As far as Zelle goes, I have warmer feelings towards Zelle. I use Zelle for some transactions. And the reason why I value Zelle over Cash App is because Zelle runs through your banks. And you know your banks are FDIC insured. And Zelle is more secure. And with Zelle, you usually see a first name and a last name in Zelle, and you know exactly what it is. So Cash App, I don't use it for business. People sometimes randomly will send money via Cash App, and that's my personal Cash App too. So I don't want my business money going into my personal account because I need to give account for it. So what I actually did, because people won't stop sending me money via Cash App, thank you, is I created one for my business account, and I primarily use Zelle for when my children take my money from me, because that's how I got Cash App in the first place. I didn't even know there was a Cash App. I was asked for money, I didn't have cash, and I was provided a Cash App. Do you have to pay taxes as soon as you file? No, you do not. Taxes are due 4/15 of every year. I have not heard about an extension this year. Tax season does not officially start until February the 12th. So We are not. We are not processing our people's returns and submitting them and waiting for the IRS to accept them, because we wouldn't do it with our own return. So what we're doing instead is we're preparing them, or we're getting started on them, but we're not going live until the IRS go live, because every year somebody's tax return gets stuck in the bottomless pit because they were moving too fast. Your taxes, if you owe, and I hope you don't owe more than you should, they are due April 15th of every year, but that really is supposed to be just your estimated tax payment from the fourth quarter. So we're waiting. As soon as I receive any updates, I'm going to let it be known. But as of right now, the date is still April 15th. Is it the same for Venmo? I think, Nikki, Venmo is more along the lines of Zelle. I do have a Venmo. I don't really know how to use it. Again, my kids made sure I was provided with that. so that they would have multiple ways to take my money. But Venmo, I know I have a few clients that also have real estate businesses, and some of them, they accept a lot of their payments through Venmo. And I do know that Venmo goes through the bank along the same lines as Zelle. But if I had to choose between Cash App, Zelle, and Venmo, if I saw my clients using them, I would be much more comfortable with them using Zelle. But I would also ask why they aren't using Classroom Panda, or I would ask why they aren't using something else where you can track how much everyone owes you. So if you only have a handful of families, or if most of your families are state funded, you may feel like it's not worth it. But those copays add up. And also, it's good for you just to be able to see, I'm due X amount of money, I collected Y amount of money, and I have Z out there outstanding. And it's easy because there's no more dealing with those god awful receipt books and adding stuff up at the end of the year. You can just click a little button and run your report. Now, if you're worried about the credit card fees are real. You also usually will have an option to take an ACH payment, an electronic payment. But my word of caution is, if you wouldn't take a check from them, don't take an ACH from them, because they can bounce that. Are Darby and Nikki services deductibles? Well, they are deductions, and anything that is ordinary and necessary in the course of business is a tax deduction. It is ordinary and necessary for you to have pretty advertisements, nice logos, great branding, for you to have services. Darby and I, we share a lot of common clients, so I can tell you I've seen the before and the after. And yes, that both ladies' services are deductible. I would name some of the things that Darby does, but she does so much, and I don't even know where to start. But I know she does. I know she does amazing work. Can you share the importance of having an annual budget and standard areas that should be included in our annual budget, in addition to payroll and mortgage? That's a good question. If you don't have a budget, you don't know when you over budget. You don't know when you're under budget. So one of the first things that we ask our people is, what are your goals? Some people want to expand. I got a few ladies that want to retire or lead a business to their children. And in order to do that, you have to know your numbers if you want to grow your numbers, or even if you want to keep them the same. The importance of having a budget is it will help you stay on track. If your goal is to make $500,000 this year in childcare, how are you going to know if you made that or not? If you and I want to say something about a budget. A budget is useless. Boom. You like, what? A budget alone is useless. It's just a bunch of numbers on a spreadsheet or on a piece of paper. But when appropriately used, a budget is actually a very powerful and effective tool. That budget must be used in conjunction with your actual profit and loss statement. Because at the top of that budget, I want to see your revenues. And I like to see revenues broken out by revenue stream. I want to see food program, private pay, state funding, VA funding, DHS funding, pre-K funding, here, whatever you have going on. And then in the expense section, of course, we're going to look at payroll. Of course, we're going to look at, we should be looking at estimated tax payments, even though that's not an expense, but we should be baking that in there. We should be looking at our supplies, or a lot of times we lump supplies and food costs because they go together on the tax return. You should be looking at your supplies and food costs. You should be looking at your insurance that I hope we have for the liability and for the vehicles if we're driving the babies around. We should be looking at cleaning services. If you have cleaning services coming, everything you need to do that you can even think of, I want to put it in your budget. Now, you may not do these things every month. That's even better. That's all the more reason why you need a budget. Because when we do our budget, we sit down and like now, or some of our people, we sat down late last year and we mapped our year out. So you may be getting new sidewalks done in the spring. You want to have that laid out and mapped out so you know you can afford it. Because when you pop them numbers in that budget sheet and you got your money coming in and you got your money going out and then you got what's left over, if you discover you have negative money left over, that, ladies and gentlemen, is a loss. Another thing I want you to leave today here, one terminology, it's a pet peeve of mine, because I'm real big on educating, impacting, empowering our providers that we work with. A loss occurs when you have more business expenses than you have business income. So when you go to Lakeshore Learning, when you hop on Amazon and you make these purchases, these are not losses. These are expenses. So you want to have all these things mapped out in your budget, and that'll show you how much you have left over. I've had people, actually, I was one of these people. I'll tell the truth and shame the devil, where we had a building and we liked the location. It was really nice. We didn't have to do anything, turnkey. But when we looked at the rent and when we looked at the expenses that would be associated with it, we had negative money mapped out. So guess what? It was a no-go. So someone asked, can I give a template? Let me see if I can read it better on my phone. Of the budget names. If you would like a budget, that's a service that we provide. We do not actually have a template because we tailor it to each of the businesses that we work with. But what you would want to do, and congratulations, you're new. I wish you 20 times 20 years. What you would want to do is you would want to actually sit down and start thinking about what you're going to do or what you think you're going to do, and realize that a budget is not law. And when I use the word budget, I'm using that term very lightly because what we really do is cash flow management. Because we'll sit down in January, we'll map out our little budget. And I see some ladies here that have gone through this process with me, some of my faves. So what we'll do is we'll map out the year. But then when we meet up every quarter, or if you're on our top tier service, we do this monthly. When you meet up every quarter, you'll see, well, Shanita, I know I said I thought revenue coming in was going to be this much, but we actually did get approved to open up another floor. So now we're going to have way more children. So guess what? Our cash flow is going to change. So what do? We update the budget for the future. Or maybe you were around with us last year when, the world went on timeout and your enrollment dropped and you said, well, I don't think I'm going to have as much coming in. And I think my glove costs just went up. And then there was the crazy toilet paper and milk shortage that went on. So those costs went up. So we had to tweak our numbers so that we would know what to do. So if you are in business and you don't have a budget, it is not too late. This is the next to the last day of the first month. Get your life. And if you have a budget and you don't have a profit and loss, then you just have a bunch of numbers on the paper. Every month, you need to be looking at your budget independently, CEOs, and you need to be looking at your profit and loss statement, and you need to be seeing where you came in. Look at your top line, look at your bottom line, what's left. But if you don't have a budget, you don't have a plan, a financial plan for your business. And if you don't have a financial plan, you can't tell when you're spending too much. You can't tell when you're spending too little. You can't make decisions about, can I afford to hire someone? Do I need to hire someone? And then you also want to be watching the relationship between money coming in and expenses going out. You can't do this without a budget. Yeah, I know what somebody's thinking. Maybe they want a replay. If you want a replay, you might want to drop a replay. But I know what someone is thinking. Someone is thinking, well, I know how much money I got in my bank account at the end of the month. So I know if I'm on target. You can't say that for sure, because remember, everything that you spend money on in that business is not a deduction. And you paying yourself, depending on how your business is set up, is not a business expense. So you really need to seek the consultation of an accountant, whether it's us, whether it's someone else. You really should for your business. I'm a CPA. I have a team of, we have 2 other CPAs and a few other accountants on our team, and I run my stuff by them just to get a second look because I understand how important it is. And yes, I have a budget. Oh, I want to talk to y'all about advertising. I don't know what Miss Darby and Miss Nikki told y'all, but well, I know what I heard about Miss Darby. I want to tell y'all, if you are spending money on advertising, you should be tracking your return on investment. If you were doing advertising and you were doing everything that these ladies are telling you and using all these resources, you want to track your return on investment, your ROI, because then it will tell you how much it costs you to acquire a new family or a new student. And that's going to come in handy because if, God forbid, this thing ramps up with this UK string or something else happens and you need to get enrollment up, it's very helpful to look back at your budget and look back at your profit and loss and say, I spent X amount of money and I was able to bring in Y amount of students. And it's very easy. Facebook ads for childcare are one of the most cost effective and one of the fastest things that you can do. So I hear that they got some Facebook ad stuff going on that's working wonderfully for some people. You also want to look at if you work in different shifts or if you have different shifts going, you also want to look at how much am I making from my different shifts, how much. I had another lady that she had a problem with one of her workers. They caused her to get fined and she got really angry and she called me and she was yelling, and she's not a yeller, but you know, my people talk to me. And she said, how much money is this girl costing me anyway? And that was a rhetorical question. She didn't really expect me to call her back and tell her, but you should know how much your people are costing you. And you're able to do this and you need to know this so you know when you can afford to have another one. What should your ratios be? If you take that additional infant, what is that going to do to your profit? How many people do you need to man that room? In the toddler room, do you make more money from your after schoolers or is it your toddlers? Is it the babies? None of these things you don't know. You can do what we call in accounting a pro forma or a what if, and you can do basically, I call it a make fairy pretend believe profit and loss, that if all of the stars connected and aligned this way, this is where I would be. So if you're in business, it's not too late, but this is something that you should definitely consider doing. And there's no shame in it if you can't do it yourself or if you get another look at what you've done. I've had the same guy, this is another question, for the last 10 years. However, I had a W-2 to provide to him. This year, 2021, I will be completely independent with 2 different companies, Childcare and Notary. Should I change my tax guy and try to do my taxes myself or seek out someone specific to each of my businesses? Well, I'm going to tell you this. Because you said, you had 2 W-2s that you had to provide to him, I would honestly say it, and I can't see who it is, and I'm not judging. I'm here because I love y'all. I honestly am, and I've seen this industry get hit too hard unnecessarily. And I would say, unless you've studied tax and you know tax law and you know tax strategy, you shouldn't do it yourself. Whatever the fee is that you have to pay a qualified professional, you probably are going to save that much more. The value that you're going to get is peace of mind, and the value that you're going to get is the peace of mind knowing that it was done right, and also the peace of mind knowing that they study this stuff that you may or may not study. I don't know what you study, um but but I don't think industry, there are a few industries where it really matters. So childcare is one of those industries where I get a lot of referrals from other accountants. I might get just as many referrals from them as I do from childcare providers. And the reason why is because childcare is a strange business in the business world. The things that childcare providers write off legitimately are unheard of. The profit margins that you experience are not equivalent with businesses in other industries. So the expenses look astronomical. On average, payroll is usually somewhere between 40 to 50% of your total income. So people that aren't familiar with the industry, they instantly think, oh, something's fishy here. Someone's hiding money or someone's overstating something. In home child care, if you have a home child care or if you have a center and you have a home, you definitely want to work with someone that knows what they are doing, because the rules are so different. The notary business, I can't think of any nuances in a notary business that somebody would have to have specialized knowledge for. But childcare, definitely, you want to make sure they have knowledge of that. And if you're moving from going from a W-2 person, you being a W-2 recipient, W-2 employee, and now you're going to be exclusively or even partially self-employed, make sure your tax professional does business taxes. Everyone that does taxes does not know how to do business taxes. There's nothing wrong with asking your professional. I actually was supposed to do a thing on this, a video on this. There are questions that you should ask your professional. It's nothing offensive by saying, and it's nothing about asking them, like, how long have you been doing this? Have you worked with anyone with a business like mine? Do you feel comfortable with this new thing that I brought on? Do you have any licenses or certifications or specialized trainings? There's nothing wrong with asking, because your parents, when they bring their children to you, they want to know that you're licensed, or if you're exempt, they want to know that you're in good standing exempt. Your parents want to know about the safety precautions you take. They want your staff to be trained. So why can't you expect another professional providing you a service to be of good standing in order to do a good job for you? How do child care providers determine whether to file annually versus quarterly to incorporate estimated taxes in our budget? So everybody files annually. Quarterly, as we talked about in the beginning, quarterly is usually referring specifically to your quarterly payroll taxes. Now, quarterly, you can make estimated tax payments, and that is something that we arrive at because we do our monthly accounting, and then we do our quarterly or monthly budget and cash flow projections. So we know, oh, Miss Smith, your profit is $200,000 and this is April. So Miss Smith, you're going to need to mail in this amount of taxes. How much the taxes are is going to depend on what else Miss Smith has going on. But if I had to pull a number out the air, because I know that's going to be the next question, and someone would probably say, well, how much should I set aside? It's going to vary because everybody has a different filing status: married, single, head of household, qualifying widower. Everybody has a different filing status, and everybody has different other income things going on. But if I were to give a general rule of thumb estimation, what I do when people just keep asking me that, and I put a number out there, I would probably say 30 to 35% to incorporate your federal and your state taxes if you live in a state that has state income taxes. And how they determine whether to file, that's usually a conversation that happens with them and their tax professional. Ms. Darby, you said FTE versus PTE. I'm assuming you're talking about full-time employees versus part-time employees. What's the question? If the question is, do I prefer full-time or part-time employees? It's really going to depend. You're going to want to do a mix that is going to be optimal for your center. So at the centers that I'm involved in, I hate to say that I own because they do all of the work. I just run the money. The centers that I own, we have full-time employees, and then full-time versus part-time is going to vary based on your state. So in many states, full-time is 35 hours a week. In other states, it's 40 hours a week. I like a mix. I like a mix to ensure coverage, but I do not like to see overstaffing. So usually you'll want to throw in some floaters. And then with COVID in many of the states, we ran into a situation where you weren't allowed to mix groups of people and you kind of had to leave the same people together all the time. So the whole world is weird right now, but I like a nice mix. I don't like burnout. We've also toyed with doing 4 10-hour shifts for people and alternating so that everybody could get long weekends. That worked pretty well until it was people's time to do their fourth 10 and they were tired. So it's really full-time versus part-time. It's really going to depend on what's going to work best for your company, what's going to work best for your employees. And there's nothing wrong with having a mix. Most people have a mix, and most people tend to have more part-time than full-time, but I like to have more full-time because I like I like people to be more vested. But I'm not going to keep people working at a full-time level for too long if we can't justify it money-wise, because you already operating in a ratio-driven business. You have an inherent cap to an extent of how much money you can make unless you get creative and you really start to enlarge your territory and increase those revenue streams. Okay, I saw that one. Okay, someone says I tutored one child under my business name and only made about $1,800 for those 4 months. I think it should I file? Is it worth it? Well, you have to, because if you make $400 or more in self-employment income, you have to file. Is it worth it? Possibly. I don't know the rest of your tax situation. You may qualify for some earned income credit with your income being that low. And if you have other income, that would just add to it, but you have to if you only made $1,800 because it's over the $400 mark. Someone says our CPA is not a childcare expert. Does that matter? I don't know. You tell me. Are you happy with your tax situation? Do you feel you're getting all of the benefits that you feel you should be entitled to? Are they clearly explaining to you things you can do? Are they being proactive or are they being reactive? Are you constantly coming to them saying you heard this? Are you following a child care tax expert and share? I have people that actually have their accountants follow me. They may most of them are not CPAs. They're other degreed accountants or whatever. But I would say if they're and it's not even just CPA, if your tax professional doesn't know childcare, if they are willing and able to learn childcare, then they could learn it. Expertise comes with practice, comes with time. So I would say that it matters, but just because you could be, I wasn't always an expert in childcare tax. I got pulled into it. I didn't land on childcare. Childcare landed on me. I was inducted in. I'm the oldest, grandchild, child, everything. And I was always caring for other people's children. And then my family cared for children. And when they got into tax situations, I was doing accounting and healthcare. And I did just individual tax. I was doing all kind of tax and other business taxes. And then they had some difficulties and they said, "Can you help me?" And then I stumbled across some literature and I found out that the IRS has an entire audit technique guide that they use to audit childcares. So we got an extension for what was going on because I had to familiarize myself with that so that I could help them get the best outcome. So I would definitely say that I would is nothing wrong with getting another opinion. If you're happy with your person and they are serving you well, that is amazing. But if you have that doubt, I would say go get yourself a consultation and see what's what. It doesn't hurt at all. I told y'all I am a CPA and I have a CPA myself. So why? Because I believe that it's valuable. And sometimes, and people pay for what they value and they value what they pay for. I want the information. So I want the second set of eyes. So I consult them. And then another thing that you want to keep in mind is that things change very rapidly too. So every time something comes out, something is issued, you want to stay abreast of that. So um someone said, "Oh, yeah, you must be agreeing with what I said about the ratio driven business." So this is a ratio driven business. Now, I work with a lot of ladies that have developed training programs and they're marketers and they're coaches and they some sell merchandise, some have dance studios, some have um computer coding and Spanish, like they do so many things for the community and for the children. Those are additional revenue streams they generated. But in the childcare, you're only licensed for X amount of spaces and you're only open for X amount of hours, and you have to have a certain amount of staff to man it. So if you take away all the additional things, you at your maximum can only make a certain amount of money. And now I'm gonna go back to the budget because I'm always talking about a budget. Budget is not a dirty word. Budget is a good thing. It's a tool. A budget will help you make more money or keep more money in your pocket. A budget will also help you save money in taxes. I also want to caution you, running out to spend money. I had saw a question somebody posted the other day. Running out to spend money because it's the end of the year and you want to save money on taxes is not an effective tax planning strategy. It's a lazy tax planning strategy because if you're in a 20% tax bracket, for every $100 you spend, you save $20. You could have just paid your darn $20 in taxes if you weren't going to do an effective strategy, unless you really need whatever it is that you're planning on buying. I'm gonna give y'all this tip because y'all had some really good questions. Y'all want one more tip, or y'all want me to not tell y'all what to do with y'all money? I want to remind y'all that if you have not contributed to retirement for 2020, most plans will allow you to contribute up until April 15th, right up until the deadline. So if you haven't done it, I do not advise on retirement vehicles. I am not licensed to sell annuities. But that is something that you may want to do, you may need to do. Something else I want to tell you, most high level effective tax planning strategies do not involve you getting a secret and getting to keep all of your money in your pocket. A lot of those things, you could think about it like a stoplight. You got green light, go, go, go. The government is going to tax it. You got yellow, it can slow it down. And then you got red, being it's going to stop it. Most of the effective tax planning strategies are yellow, whereby you defer the taxes. It's like a now or later. They're gonna get you now or they're gonna get you later. And that flows well into someone asks about Roth or traditional. A traditional, and all of this is income dependent. So depending on your income, and this is why you need a qualified accountant. So with the Roth IRA, a Roth IRA is generally speaking good for a person that expects to continue to increase their income in the future. because a Roth IRA is paid with after-tax dollars. So you've paid taxes on your money, and now you're going to put money into retirement. A traditional IRA is the traditional way. Most people would have it deducted from their pay. It would be pre-tax deductions, and then you pay the tax when you get older. So I suggest you work with, and everybody's in different states. So I'm not sure how many states my people are in. But I will tell you that a nice combination works well. So if you know, and I'm not even being optimistic or pessimistic, but if you know your income is only going to continue to increase, you may want to consider a Roth, depending on your overall, your situation. This isn't advice for Mary, Sue, Beth, or anybody in particular. I gotta tell y'all something else. Somebody said, tell us the tips. There is a difference between tax planning and tax preparation. When you go to get your income taxes filed, that person has one job: to do your taxes. So we get a lot of clients that come to us and they're upset because someone didn't tell them that they could have did blah, 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 blah. And of course, we're happy to shine and say, well, Miss Johnson, we can help you with this tax plan, but I have to be honest and tell you that if you pay for tax preparation and you got tax preparation, it's really not that person's job to execute these strategies. They're two distinct separate things: tax planning, tax preparation, and then tax representation. If you fall into some type of trouble through fault of your own or through IRS mix-up, those are three separate things. Sometimes one person can do all things, but it's usually like if you have a child and that child has childcare, and then they might need drop-off service, that might be something else. And then you might do parents' night out, that's something else. Three different things, three different services, probably three different bills or three different rates that you would charge for those things. So be mindful of that this year, because even though we love new clients, but I really want to make sure that if we don't do anything else in all our getting, that we get understanding, because we are destroyed for lack of knowledge. But not on my watch. Not on my watch. You ladies have asked some really good questions. So I promised you that I would share with you the nifty 50 list of daycare deductions. I did that. And the other thing that I want to share with you, I want to make sure I let you know about. If you are not sure, oops, and I think, did I give you the wrong link? See, they left me unattended with they left me unattended with the computer again. If you guys have your accounting, or if you don't have accounting set up and you are tired of every year scrambling and trying to make it work and rushing down to the deadline, maybe you fighting with your spouse because it's always you holding it up, or maybe you are sick and tired of being sick and tired of owing all this money in tax. If this is your situation, you are not alone. No judgment. I understand. We see it all the time. We do have a few things for you. Now, these are the bonuses that we offered last week at our Childcare Tax Readiness webinar. If you haven't seen it, the video is on our YouTube page. I dropped the link. And in that webinar, we do it every year. We actually went through all of the things that you need to know and do to prepare for tax season. We get into talking about how you should file based on how your business is set up. And we gave you a lot of information in that. And at the end of it, we made them an offer. So I will go ahead and I will extend it. I will share the same thing with you guys, and I will tell you how you can work with us. So I put the link there. I hope it works. If it doesn't, I'll get it to you, only because I'm multitasking and I'm not that good at it. Not yet. I'm getting better. So I'll show you what the offers are, if I can figure out how to make this work. So if you just need some financial coaching and you are not sure what's going on, where the money is, you're working so hard, you can't figure out why the harder you work, the more you don't see the money in your business, you have accounting in place, or maybe you don't and you want to talk about what getting accounting in place looks like, you might want be interested in offer number one. Our consultation services are usually $175 an hour, but you can get they're usually and we break it down into two sessions. Well, they're $175 for 45 minutes, but we break that down into two because we give you homework. The second thing is almost time to file taxes. You're not sure if your QuickBooks is decent. You're not sure if everything is recorded properly or captured properly, because all tax preparers do not do taxes. I'm sorry, all tax preparers do not do accounting, and they may not catch things. If you want a diagnostic, we can do that for you under bonus offer number two. And what we do here is we look in it and we give you a written report and a video report and let you know the status of your accounting systems and what needs to be done to fix it. And then the third thing, maybe you don't have any accounting at all and you want to get some in place. In that case, we would go in and set up your QuickBooks Online for you and then turn it back over to you. This is ideal for someone who knows how to use QuickBooks, they know accounting, or they have the ability to learn. And then, of course, we also have services where we could actually do the accounting for you if you're interested in that. And I did share that link with you all as well in the comments. So do we have any additional questions before I log off? It's so weird with these delays because I've been accused and told that I would always hang up too quick because I didn't know I couldn't judge the time lag. So does anyone have any additional questions? Did we hit them all? So y'all got y'all nifty 50 listed daycare deductions, right? So y'all gonna go through your daycare deductions and y'all gonna make sure this information is being presented to your tax professional. And then you also have the link to the YouTube channel. So for the lady that, I think it was a lady, because I can't see y'all faces on this or your names. It just says Facebook user. So for the person that was asking, how should they be filing their taxes or paying themselves? You are aware that you can watch those videos. And then the other thing that I shared with y'all, I think, the Childcare Tax Readiness webinar, I showed you all where to find that as well too. So you all know how to reach me if y'all have any additional questions. Thank you, Ms. Darby and Ms. Nikki, for allowing me to come and share here today. I'm a teacher at heart myself, and I enjoy it. And I look forward to seeing you all. You all stay safe, stay well, stay blessed. Bye-bye.